Hello friends, welcome back. This is Shravan Reddy from TradePro. So today I want to explain you how a myth has been formed around price action, thinking price action is the only way to be successful in trading. No, definitely not. This is just a myth that has been formed by the big investors over the years to the retail traders. So let us understand what is that myth. So before going to that, friends, I just want to ask you a question. What is a price action? A price action to me is an advertising mechanism of the value, and it's a number that represents the value. Price is just a numeric that represents a number, right? Hope everyone should agree with it. Okay, because every article in this world will have a price. Your pen will have a price, your pencil will have a price, and your car will have a price, your bag of tomatoes will have a price, your bag of aloo will have a price. Everything in this world will have a price, and that represents the value of that article. Yes, that's the only thing about price action. So today, let us see how our retail traders are using the indicators that are built around the price action to trade the same price action. Let me explain you the same thing now. So the formulas. Before going to the deeper topic, I just want to explain the formulas. So RSI calculation, how RSI is being calculated. The most favorite indicator for all of our retail traders, most of our retail traders. Okay, RSI, relative strength index. People tells that it talks about how strong your price action is and all those stuff. But this is the formula, friends. RSI equal to 100 minus 100 divided by 1 plus RS. Okay, it talks about just price action. The input here is upward movement price action, okay, and the downward movement price action. So you are just pushing the price, okay, of that particular asset, taking over a certain period of time into account into a mathematical formula and building another price. What is the input? Price. What is the output? Price. What is it going to achieve actually by passing input as price and getting output as a price? And what is the analysis that you are going to do there? Let us take our next favorite traditional indicator. This is called as traditional MACD, moving average crossover divergence. Okay, what is moving average crossover divergence? MACD, 12 period minus 12 period EMA minus 26 period EMA, and they does a lot of analysis around this. Why to do those analysis? Because you are just passing exponential moving average, which is a number, and that number is nothing but price of the asset that you are taking into account. You are just taking this price action and passing that into an EMA, and once again passing that EMA into MACD formula. What is the big difference that you are going to gain here? What is the thing that you are going to learn here? Nothing. Price input, price output, right? Well, coming to the third, okay, SMA, the most commonly used thing. It is a simple numerical indicator, A1 plus A2 plus A3 plus A of n divided by the total period. If you are taking around 14 periods, okay, whether it's 5 minutes, 15 minutes, or days, or weeks, or years, it doesn't matter. What is the time frame that you are going to take? You just pass the time frame into account and the price. What is the average price during that time? What is the price that's been there in the time, and take an average of that. That is simple moving average. Price is the input and price is the output. Bollinger Bands. Bollinger Bands, if you know it properly, this is not invented for markets. Bollinger Bands is something different. The guy who maybe he tried to fit into this market, but the mean deviation is will also have the same price into account. This indicator makes some sense because it tries to solve the problem of value. Okay, when your stock is being overvalued and when your stock will be undervalued, but still price is your input. Why to take just price as the input? All these indicators just takes price as an input and just throws you price as an output. What is the point of doing the analysis like this? Just ask yourself. Oh, this is my question. I used to ask my questions like this when on the days when I used to follow these indicators, thinking that these are something golden tools that I can use to dig diamonds. Okay, no, these are not golden tools, and you are not going to dig even coal out of it. Okay, just understand these are very commonly used tools across the market. Okay, and you are building strategies around it. Okay, you are comparing MACD calculation, RSI calculation, and all those stuff. Okay, if RSI cross 40 above, okay, and max crossover, MACD crossover happens, okay, it might be a bullish signal. Why? Because like the markets are not built in such a way. So markets are so random. Understand the information that market is giving. The chart itself will give us a lot of information, friends. It's not that these indicators, stop using these indicators. Okay, and till the point you use these indicators, we just run in circles. This is the circles where we used to run behind them. Okay, price action is a circle, and CCI, MACD, RSI, SMA, Bollinger, EMA, lines, drawings, whatever you might be. It is just like circles, circles, circles. But we are not going anywhere. We are not even crossing the circles. We are still in the name of analysis. We are just there in the circles of the price action that is being built around us. This is the myth I'm talking about. Just understand, friends, here. Okay, ask yourself this question. Okay, my input is price, my output is price. What I'm going to do with it? What is the information, new information that I'm reading there? Am I reading something which makes sense for me? Just ask that question to you, and just try to break the myth of these price action indicators and mathematical formulas. Okay, and once again, friends, we are not here to run behind price action. We are here to run behind value action. Understand, when you are making some investment, just get that point. Yes, I'm making this investment. Is it a real value for me? Am I going to make something out of it, some money out of it? Just ask this question. This is your common question, common life question. Everywhere, every article that you buy in your life should have this question. Just try to ask this question to yourself. You will definitely get the best answer in your life. I just want to give us some awareness to you, and these are my experiences. Even I used to be like this, and after that I have stopped using any indicators. If you see in any of my charts, I never ever draw a line. No, I just want to read the value. I don't want to read the price at all, because price is an advertising mechanism. Price advertises my value. Then why I have to read price? No point in reading price. Try to read the value, where people are interested, to buy that asset that you are going to trade. This is how we have to start doing it. Otherwise, there is no big point of doing a trading. Right, friends? I just want to say thank you to everyone, and I want to end this session here. Once again, happy trading. Start doing the best.